This is Paul with OUTPACEsys, and this is our report for the week ending August 29th, 2008. As usual, we'll give you a status of our trade's performance for the week, we'll summarize our current signals, and we'll finally show the market behavior with our performance comparison charts and our weekly performance charts. The trend updates we discuss here give the general sense of the market trends. As such, we don't recommend you use them yet to actually open real trades. Specific trades can be derived from our real-time alert signals, which are generated after detailed timing analysis and distributed via email. Our trades continue to perform very well, even in this confusing scenario of late. In a nutshell, in the past 2 weeks, the Nasdaq 100 stocks have come back to what have been the long-term resistance levels defined by the retracement of June-July. In other words, after recuperating a large part of the June-July loss, they went back working the long-term levels. After opening the week with a very nice rise, the Qs closed this last week with a sharp down day, which may be harbinger of trouble coming. We closed our positions on Friday and are now waiting for the new signals to develop. The situation is similar for the S&P 500, although its recovery from the July dip has been less than for the Qs. Our indicators are turning negative, but we are still waiting for confirmation. As you know, we've been bearish on crude oil for a good 6 weeks now, although we have been working the bounce back from the very sharp fall that lasted until mid-August. The sell signals we are getting have to be treated carefully because the mid-term trend is currently positive and the longer-term perspective might be turning back up. Gold is much of the same, although its bounce back has been less pronounced. Let us now quick look at our position in some of the sectors. We've had some very accurate and successful signals with materials, where we caught virtually all of the drop in June-July. Currently the posture is bullish, but we are waiting for the sector to break from the current range. Everybody knows of the dramatic fall in the financial sector, where again we had successful trades. Here too, we are looking at the short-term bullish posture. Let's close this section looking at the healthcare sector, which experienced a wonderful rally in the last 2 months. Having listened to the discussion so far, you may be wondering what you could possibly do in terms of high-performance trading. Well, let us make an example. As you can see, we had a buy signal in early July. Looking at opportunity with options, we select the October 08 195 put, shown in this picture, which we bought then at 2.6. Right now, the same options are quoted at approximately 12 points. What does that mean? Well, that is a profit of 460%, earned in a bit less than a month. This is why these trades are very good at reviving the growth of an investment portfolio. An investment of $1,000 will now be worth $4,600. Now, we don't want to sound like some of those folks that claim that you can automatically and always get these results. In fact, we do want to stress the fact that we identify and execute these trades, keeping in the foreground all the necessary parameters to plan the trade, appropriately manage capital, and most of all limit risk with stops, etc. It does take quite a bit of work, but it's very doable and extremely rewarding. Now let's look at the past week in a bit more detail. This is the 1-week view of the equities indexes, showing the wild swing ending at -1% for the DJ and the S&P and -3% for the week for the Qs. The year-to-date chart, shown here, shows the uptrend still happening, although we may be getting into some tougher times now. Weekly individual charts for the Dow Jones, the S&P, and the bonds show all indexes in mildly positive territory. Now, contrary to what happened in the US, international stocks had a positive week last week, although the year-to-date performance chart is still quite negative, with Hong Kong stocks still flirting with a -30% year-to-date performance. Sectors in general had a slightly negative week, except for the financials that recovered a good 3%. The year-to-date view still shows range trading here. Oil and gold had a very modest growth last week and are still working this very interesting phase in which they are trying to go back to a bullish long-term trend. We have been monitoring this very closely and are anxious to see what will materialize. Weekly performance charts for both oil and gold shown here, show them in quite negative territory still. This is it for this week. Thank you very much for checking in with us again. If you enjoyed this report, we hope you will share this video with your friends, as well as our website, OUTPACEsys.com. The link is on the right of the screen. Please visit OUTPACEsys.com, where you can find past editions of our weekly reviews and full details on our trading system, our approach to the market for incredibly profitable investments, and the services we provide. As usual, we'll see you online next week. Happy trading!